American households are on the brink of ruin. Hi, everyone, and welcome to another Ainslie Insights brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Branko, who's been identifying some real issues in the individual household debt situation that really do need a bit of a closer look. So how are you going today, Branko?
Yeah, good, good. Thanks, Chris. Eager to talk about today's topic. I think there's a lot going on here, and basically under the hood of the economic situation, it does look quite bad, even if aesthetically right now with assets kind of going up to some extent, it's a lot worse under the hood.
Absolutely. And that's what was really interesting about your article today and the way that you're looking at it, because if you look at a lot of what we've been seeing of late, and we've been discussing this in various forms, but generally what you see is quite good. I mean, I would always argue that comes back to the fact that we've seen liquidity globally coming in various forms, even though, the Fed say they're keeping rates higher to try and drain that out. It hasn't been working. They've been doing the other and putting it back in. But really where you took it today highlighted that, yeah, that might be happening at that big global level, but at the individual level, or the household level, there's some real issues. So can we start off really looking at what the data has to say about US household debt and spending habits? Because I think that's sort of the start of this under the hood angle that's really important.
Yeah, so I think firstly, like any time you want to look at an economy as a whole, I think it's good to look at some of the micro um, situations that people have to endure on a day-to-day basis. And basically, the data is saying, for example, that personal spending grew at double the rate of personal income last year, for example. So that's unsustainable. And that's one thing. And then you also saw credit card balances increasing by 4.6% last quarter. And 1 in 12 people can't make their credit card payments, which is the most we've seen since 2011, where unemployment was obviously a lot higher. And this is kind of a key point as well, is that we've got all these kind of bad debt situations and spending habits, and people just, personal consumption growing at a rate of 3.8% compared to GDP, 3.3. So it's kind of unsustainable metrics. And then you also look at the fact that unemployment in theory should be the best it's ever been. So this shouldn't be the environment where people are struggling, yet they are. That's kind of the big takeaway. And it makes it very difficult for people to sort of get out of this situation that they're in. And so just the fact that this is all bad, but again, unemployment is apparently at its best, even though we do know that to some extent these numbers are a bit fudged, which we discussed in the past. I think
Yeah,
you mentioned,
absolutely.
like, I forgot the exact number, but it was like 6 of the past 7 have been
Well,
six,
those revisions the other way the next
yeah,
month.
they've been revised down by like 100,000 jobs. So
Yeah.
probably the unemployment picture isn't as rosy as they say, but still we're much better economically, yet people are taking on more debt than ever, even compared to pre-pandemic levels.
And I think when we're talking about under the hood, that's really important to look at with that unemployment data, because we've highlighted multiple times that a lot of that, what makes it look good is actually propped up by part-time jobs, whether it's people having two part-time or multiple jobs, multiple part-time jobs to make it work. And then households, which we were really focusing on today, households having to have multiple people in the household having multiple part-time jobs. So when you looked at it through that lens, it sort of suddenly starts to make sense why they might need to take on additional debt to make ends meet, because that's not the same as secure, reliable, full-time work. And often those part-time or particularly casual positions, that reliable is not the word you'd use. They might have work this week but not the next week. If you average that out over a year, it's not really adding up to the same as a full-time position.
Yeah, that's true. I think that's an example of manipulation in jobs data that they might. I think there's two examples of manipulation in jobs data. One is like kind of an implicit, where it's baked into how it's calculated, and there's other examples like the one you kind of laid out, where it's a bit more of a purposeful numbers fudge, where they're trying to, not account for the fact that people have multiple jobs at that level.
Sure. So where does this head? Like, we often use the example of the GFC, so the global financial crisis, 2008, that sort of period of time, where we had a lot of similar themes playing out that really ended quite catastrophically. It was ultimately saved by central banks coming in and doing what they did. But it was a real issue. Is that a similar situation? Can we use that as an analogy here? Like, how do you look at it in comparison to that big event in that part of history?
I mean, obviously the macroeconomic situations are different in many ways, but I think there are a series of parallels. For example, you had like the ninja loans, which obviously was an example of looser bank lending, which we discussed a couple of weeks ago, that is starting to occur. But also it's an example of people not being responsible with their financial situation and taking on more debt. Like ninja loans, no assets, no jobs, no income, yet they got a loan. So I think that the combination of decreased lending standards, which we're beginning to see, and then also people just freely taking on debt is similar to that situation, along with the inflated asset prices, which, again, given the situations at the micro level for individuals, I think these asset prices that we're seeing right now are somewhat inflated too.
And that has that compound effect, doesn't it? Because if you're assuming that the value of the property that you're buying, as an example for a household, is worth, let's say, $1 million, just to have a round large number, and then we see the market turn down and that's revalued at 750,000. So you've lost a quarter of the value. That has compounding effects on everything else to do with that household's capacity to service that debt.
Yeah, I think that's a good point in that if people are taking on more debt, the impact of any individual change to the downside in that asset is going to have a more profound effect on them. Do you know what I mean? Like,
Yep.
If you're taking out a big loan on a house or even credit card debt, for example, like just some of the rates for credit cards are going up and the rate at which they're being paid is also going down. People can't pay them. So that will obviously compound and make it worse over time.
Yep. So we've looked at that sort of from that angle of historical. There's an interesting point that you've made, and we've discussed about the relationship between what's going on with US household spending in particular and Bidenomics, when you look at that as the sort of government policy that's overarching how the government looks at spending. Can you maybe talk a little bit about that, how you see that correlation playing out and what the relevance is for this discussion today?
Yeah, I think it's just a big kind of macro point in that it's just very interesting to note that household spending and Bidenomics are like kind of the same thing. Just, the way that Bidenomics is just borrowing debt like crazy, spending like crazy. Households are just doing the same thing, just on a lower level, obviously, borrowing debt and spending a lot. But they don't have, the ability to just print money at will. So their consequences are going to come well before the government sees its own consequences. Now, at the end of the day, the government will probably have to bail out a lot of these people anyway. So indirectly, it will still be an overall negative. But it's just interesting to note that, if you were going to learn and act in a similar fashion to your government, which is what people are doing, then it would lead to your own personal financial ruin.
And that is a really important point that I always like to focus on and really drive home. At the end of the day, that's not the individual's responsibility. I mean, obviously, your personal finances are your responsibility, but if we think collectively about individuals, it's not really their responsibility to assume that the government is doing the wrong thing. These are the organizations with the experts, right? They're coming on TV and telling us how we should be living our lives, how we should be managing all aspects of how we go about living in a society. So it's not really unreasonable to think that we should be expecting from our governments a level of responsibility if we're expecting individuals to take a level of responsibility. It's a really important point, I think.
Yeah, I mean, I think, it's obviously naive to just, if the government does something, then kind of follow that same principle. But it's also kind of naive to think that people aren't going to do that anyway. And, that like the examples that our leaders set before us are examples for a reason, is that we generally, you would think we would trust them, though. Trust in leadership, I think, has been going down recently across globally. But I think that in part is the reason why you have that level so crazy. When you see the government just throwing money at everything, it doesn't set a very good example.
No, and people have to learn that example from somewhere, and that's kind of my point. Like it's not unreasonable to think that the government should be a good place to take an example from, and they're just not in this environment, like in this context at least.
Yeah, and again, the people will face their own financial ruin because they don't have the ability to print money and game the system. So
Hmm.
it's not looking too good for the US households at the moment.
And it might, and you made that point, right? It might end up being that ultimately the government has to bail out these individuals because they end up in that same situation. But that's going to come well after many, many people suffer
Yeah,
as a result of that, because certainly they're not going to just do it proactively. So yeah, that's a real issue.
that's right.
Well, really important discussion, as always. Thank you for reminding us about what's going on in that space and taking us down that journey today. So thanks for that, Brenko.
All right, thanks, Chris.
Thanks everyone for watching, and we'll chat again soon.